Good afternoon, everybody. Good evening, good morning. We have an increasingly international audience. Well, I will just jump in here. It's a pleasure to be back after a long summer here, not running our webinars, and we're really excited to not only have a webinar today, but to launch our full 2021-2022 Learning Exchange Series. So thank you so much for joining. And we are going to drop a link momentarily in the chat so you can take a closer look at a lot of these speakers. Apologies that it's a bit small, but we'll zoom in on a couple of points here today. To give an introduction here, I'm Lauren Cooper, and I lead the Forest, Carbon, and Climate program here at Michigan State University. And I'm really pleased to be part of the Forest Climate Working Group, which is our co-host of the event today. And I've been on the steering committee and leads the knowledge transfer components for the Forest Climate Working Group. And we're really pleased to offer the Learning Exchange Series as part of this relationship. If you're not familiar, the Forest Climate Working Group is a diverse group of forest interests with over 65 members, I believe now, including landowners, industry actors, conservationists, academia, and those active in carbon markets. The group has worked together for over a decade to advocate for state and federal policies that work towards ensuring sustainable forest use and prevention of land use change. But we're increasingly engaging a broad audience on the educational needs and topics that are really crucial for us to move forward and bring science into this space. So again, here we have a really diverse lineup. We're going to be picking up our monthly event. It's the first Wednesday of every month. It's at 3 p.m. Eastern time. You can go ahead and register for any and all that are of interest to you now on our website so that you get calendar notices and reserve that time. So I want to make sure that you know about that. If you're on our email list, you will receive reminders as well, and through the Forest Climate Working Group if you're involved there. The one couple details I wanted to flag for you all on the full lineup is, as you can see at a glance here, we have a really diverse lineup of speakers. We have NGOs, government, private sector, research groups. So it's really going to be a really exciting season here with our Learning Exchange Series. And I want to also flag that today we're going to be starting what you can't see on the left side here. We actually have 3 thematic bins for the speaker series. So the first 3 sessions here are going to be looking at markets and voluntary activities. And then we'll move here, and the second 3 sessions here is going to be about how the topics of carbon and climate are changing priorities and how we make decisions. So we'll be hearing from a couple of conservation groups, government actors, and some new initiatives that can help us understand how these folks that have been doing a lot of good work for a long time are being informed and are shaping priorities because of carbon and climate. And then finally, we're going to dig into some of the science. So the final session is emerging science and information. We'll cover and we'll learn about new data, measurement techniques, and results and how they're being used to inform decision making. And again, I'll drop a link so you can take a closer look at all of these, but wanted to warm us up to the full lineup here. But to get to today's speaker, I'm delighted to introduce Patrick Mcguire, who is a senior program manager with Forest Trends Ecosystem Marketplace. And today, Patrick will be kicking off our first 3 sessions here that have this thematic area of of markets and voluntary activities. So he'll be giving a talk on an intro to and the status of voluntary markets. And in this, he'll give us an overview of some of the key components of credits and markets, and then provide a robust overview of the role of forest carbon offsets in this voluntary space, and provide a little bit of a peek of projections into the future and what we can expect to see as important topics. Before I hand it over to Patrick, though, I wanted to go over a couple of housekeeping details. Just a quick note that for any questions that come up, you are welcome to use the chat feature that we have highlighted here. we also look at the Q&A, so you're welcome to put them there as well. We will organize all questions. We'll try to answer any that we can during Patrick's talk, with any of the information that we might have. But we will organize them and have a Q&A session after he is done. If you would like to join our if you are joining just by phone and would like to submit a question, please email to forestry@msu.edu so we can collect them by email. And then also, if you'd like to be on our email list or you have any sorts of follow-up questions or comments, please email us at forestry@msu.edu to join our email list or to communicate with us about the event. And as a final note, the event is being recorded, and Patrick has been willing to make a recording available and also a PDF of his slide deck that will be on our website within about a week or so. So flagging that for you. And we also have all of our previous recordings from our past sessions as well. So we have quite a library now of really excellent presentations, but this new one will be up within about a week. So with that, I will hand it over to Patrick, and thanks so much for being here with us today, and I'll pop back in for the Q&A.
Great. Thanks, Lauren. Right on cue, there's a helicopter going overhead. I apologize for that. And let me know when you can see my screen.
Yep, looks good.
Okay, great. Well, really happy to be here today, and honored to be the lead-off speaker in this 2021-2022 Learning Exchange Series. So thanks to our hosts for having me today. And yeah, the title, Intro to and Status of Voluntary Carbon Markets, there's going to be a bit of 101 material here. So I hope that's okay for those of you that are more seasoned hand in this. And also there's going to be a little bit of compliance markets issues as well. So just jump right into it here. All right, sorry, just adjusting my screen. There's a few things out of place. Okay. A disclaimer right up front, and I won't go into the fine print here, but as Lauren said, we're going to have these slides available for you afterwards. And this is just stating that we do collect this market information every year, and we just advise people that are using it that before you're using it for commercial purposes, that you consider other sources as well before you make decisions based on this information. We've been at this for over 16 years for Ecosystem Marketplace, tracking the voluntary carbon markets, the highs, the lows, and everything in between. And we're pretty confident in the data we put out there. We're the main source of information in this otherwise opaque market, but people are best served by doing their due diligence as well. So who is Ecosystem Marketplace? I guess I should first say, who is Forest Trends? Forest Trends is a nonprofit. We're based in Washington, D.C. We take market-based approaches to solving some of the most challenging environmental and conservation problems of the day, and pioneers in conservation finance issues. Ecosystem Marketplace is an initiative of Forest Trends. It's been around for about 16 years. Forest Trends has been around for about 22 years now. The initial tagline was the Bloomberg of environmental markets. So we're a leading global source of information on environmental finance markets and payments for ecosystem services. We run a website that has breaking stories that are in this field, and that includes biodiversity markets and water markets. But in the last several years in particular, as so much more energy has poured into carbon markets, we've tended to focus a lot more of our time on carbon markets. We also put out several flagship reports that we're best known for: the State of Forest Carbon Finance series, and also the State of Voluntary Carbon Market series. Some of the most recent publications are here in the top right corner of the screen. And I'm going to be going into two of them. The most recent State of Forest Carbon Finance report that we put out in June or July of this year that had data through 2019. And also the most recent State of Voluntary Carbon Markets report there that you see in the right-hand corner, Markets in Motion, that covers data up through August 2021. Okay, radical transparency for voluntary carbon markets. That's what we're after. Right? What Ecosystem Marketplace is doing as a nonprofit, our main goal is to drive transparency in these largely opaque carbon markets, particularly voluntary carbon markets. As I mentioned, we've been at this for 16 years, globally recognized. I think most people would say that we are the group that is putting out most consistently and with the most in-depth data information about voluntary carbon markets in particular. And then the website that I mentioned, high quality market and reference data. And I think we're fairly well recognized as a trusted source. That the nonprofit status, I feel, distinguishes us to a certain degree, as well as the amount of time we've been doing this. So a lot of the carbon market actors trust us with the data that we are compiling, gathering, and then sharing back out. The sharing back out to the market part, I'd emphasize that we get all this very specific information from market actors with the understanding that we're going to aggregate it and anonymize it. So we're not sharing information back out unless it's able to be rolled up to a certain point, that we've got enough data points that we can aggregate them, and then people will, the readers of the material are not going to be able to distinguish who a particular respondent might have been, what their particular data is, and certainly at the project level, you won't be able to determine prices of a particular project in the way that we present the data. This is a context-setting slide. It's a little bit odd because it's covering a lot of things and I'm not going to be talking a lot about today, but the graphic is pulled from the State of Forest Carbon Finance report from this year, which has a much broader scope. The reason I'm including it here is for this series, it's voluntary carbon markets, but I've been asked to speak, with more of a lens on forestry credits within the voluntary market in particular. And the State of Forest Carbon Finance report has that forestry lens on the voluntary carbon markets, but it also looks at compliance markets as well. How do forestry credits, how does forest financing work in compliance markets? And the third pillar of that report is jurisdictional red, non-market payments. So I do want to touch on those other aspects a little bit in that graphic, because they do kind of feed back into today's voluntary carbon market, particularly as it pertains to forestry credits. So just kind of starting from right to left in that graphic, there are a number of finance mechanisms out there that support jurisdictional red. Red is, for those of you that don't know, reduced emissions from deforestation and forest degradation. And traditionally, they have been bilateral donors and multilateral donors that are interested in promoting greater deforestation in developing countries. So this red mechanism that was set up from the UN Forest Climate Convention laid out the groundwork for this. It comes in 3 stages: a readiness stage, implementation, and then finally moves into results-based payments, which are not so much market transactions, but countries are paid for achievements that they make. So it can be viewed in a certain sense as aid to those countries for achieving deforestation goals that are set up. But there's no credits that are traded hands here. Credits are not the unit that this is based on. They're paid essentially $5 per ton, but it's not a credit that it goes into a marketplace and is traded in the sense of carbon markets. And in the 2 circles on the left there, voluntary markets and compliance markets, just to start with, overall this description of carbon markets I have at the top of the page. Carbon markets transact quantified units known as carbon offsets, or more frequently nowadays are referred to as credits, which represent 1 metric ton of carbon dioxide emissions or its greenhouse gas equivalent. And those can be split into voluntary markets and compliance markets. The distinguishing feature between the 2 of them is that there is a regulatory driver in a compliance market that is compelling reductions of greenhouse gas emissions. And in some of those compliance markets, offsets are allowed to satisfy a certain portion of the emission reductions that regulated entities are expected to achieve. Voluntary offset markets, the opposite. There is no regulatory driver compelling any transactions. It's completely voluntary. And in this case, it refers to the collective global offset transactions that are in the space. There is no single marketplace. It's a bit of a misnomer, and typically we pluralize it and refer to it as markets. Excuse me. There's it's better thought of as a series of bilateral transactions, and a lot of the voluntary carbon market is still over-the-counter bilateral transactions, and there's a growing landscape of exchanges, exchange-traded platforms where these credits are being transacted. And yeah, just to give a little bit of context here, this is certainly still the sort of basic 101 stuff. So how's a voluntary carbon offset produced? It has a lot to do with the project developers come up with a good idea, ways that and activities that they can conduct that are either going to remove carbon from the atmosphere or avoid carbon emissions. And they don't just jump right in. Maybe back in the day they used to, when the voluntary carbon markets were a little bit more like the Wild West. But then the standards came to town. So these standard setting groups have helped drive significant quality by creating rules for what constitutes a credit and processes for validating and verifying credits and tracking their issuances and retirements. So we'll talk more about these standard setting bodies, but the project developer basically develops a project idea note, moves through project design documentation, and then there's validation of what that project design is saying. Is it actually, feasible to do what they're saying? Does everything check out at that level? And then verification, a body that's been authorized to do verification according to the processes and rules that the standard is set up, checks to see that the emission avoidance or emission removals has actually happened. And in that case, the credit can be issued. So issuance of the credit is the final stage in that process along that top band. I guess I would say that when a credit is born into the world, when it's issued, it's not issued as a voluntary credit per se. It's just a credit, and then it can be used for whatever purposes, either in voluntary or compliance markets. And we'll talk a little bit more about that, about how those two markets are blurring a little bit. Then the project developer, once they've been issued the credit, they're able to sell it on to market intermediaries, either typically larger scale brokers that are sometimes these exchange traded platforms, or retailers that are oftentimes selling in smaller batches, or they can sell directly to the end buyer. The end buyer being, for example, a corporate entity that has a commitment that it wants to meet. And that end buyer can either retire that credit or they can hold on to it. And most of the standards are also running their own registries where they can record the issuances and retirements along the way, and that's all public information. This is getting a little bit ahead of ourselves, but since we're going to drill down on forestry here, I just wanted to specify what I mean by forestry credit types. So at Ecosystem Marketplace, we kind of divide the credits into major categories, and forestry and land use is one of those categories, and renewable energy credits is another project category. Within the forestry and land use category, it is then subdivided into various project types. So for example, Red Plus is a project type, and we disaggregate that further into avoided unplanned deforestation, or if the project was addressing avoided planned deforestation. And other major types within the forestry category is afforestation and reforestation and improved forest management. And the last time we did this, last year, we were still lumping agriculture into sustainable agriculture into the forestry and land use category. But as that grows, as sustainable agriculture, soil carbon credits, as the market for that potentially grows and the supplies, we're looking at breaking that out in follow-on reports. So those are the types we're looking at. Real quickly, this is information from the State of Forest Carbon Finance report from 2019 data. So these are the prices that we're seeing. So with red, we were looking at about 380 was the average between these two different types of red, and the prices for afforestation and improved forest management, which remove carbon from the atmosphere, as opposed to prevent more carbon from going into the atmosphere at higher prices at the high 7s and low 8s in terms of US dollars. This is a slide from our hosts at the Michigan State University. Thanks for this, Lauren. So it's kind of showing the same thing as the previous slide. So it starts with, in this case, a forest project, a forest owner seeking additional income for climate change mitigation or management activities. They do what they need to do. A project verifier who's working off of the standard, typically from a third-party standard, such as VER or the gold standard, then does checks everything out, makes sure that everything is producing the carbon sequestration, the emission reductions that they said it would. And then if it checks out, credits are issued, and the business can buy those, and the financing flows back to the forest project. This is getting towards what are the sort of basic principles that all of these standards have set out. I referenced before, I made a reference to the Wild West, how carbon markets used to be, and significant work has been done by the standards over the past 10 to 20 years to define high-level principles as to what is quality for a carbon credit. And the top one there, real, I think of this as a rolling up of all of the other different high-level principles. So avoidance of double counting through conservative estimates of reductions, sound quantification methodologies are wrapped into that, and that they're verified in permanent reductions. And you'll see some of those, that same language fall out in the principles that are below here. So additionals may be one of the most important ones. So a project has to be additional in the sense that what it is achieving in terms of climate impacts would not have happened under a business as usual scenario. So the climate finance that is being brought to the table is what is driving the reductions or removals that are taking place. So I won't go into all the details here. I think I'll touch on the last one, permanence, because let me close the window. Sorry, there's a bit of noise coming through. Apologies for that. Permanence as it relates to forestry is an interesting one in that no forest is permanent, right? Eventually, there could be a forest fire that runs through the area, and all that, the forest goes up in smoke. So how is that dealt with in forests in particular? The standards have established rules around that, where there are buffer pools. So all the credits that are issued for a forestry project are not then turned over to the project developers. Some of them are held back in a pool, in a sense, an insurance mechanism. So if any one particular forest is damaged and those credits are no longer viable, then the buffer pool is there to cover that. There's an extra slide here. Again, thank you to the hosts for this slide that goes a little bit further into this concept of additionality. So yeah, again, a project has to be given credits. It has to go above what would have happened in a business as usual scenario. So that's depicted, the business as usual scenario in this case is depicted with this dotted line. This forest that was standing, let's say it was expected to continue to grow and sequester more carbon at a particular rate, but with the carbon finance that comes to the project, they're able to implement greater changes in management, avoid conversion in certain areas of the forest, and you get a better result in terms of how much carbon is being sequestered by that forest, which is represented by that higher line. The gap here, the wedge, that is representing the additional forest that was sequestered or stored by this particular project, and represents the amount of credits that could eventually be issued to the project over time. So again, that's this core concept of additionality. Yeah, so I'll go into a few slides from the Green Growth Spurt report, the State of Forest Carbon Finance report we put out in June of this year. Everything in the next 5 or 6 slides focuses specifically on forestry credits. And yeah, the first slide starts out with just the map of the whole world. Again, this forestry lens, this report looks at compliance markets as well as voluntary markets. And I won't go into the details here in the compliance markets. I will note that China launched its ETS this past year forestry is integrated into that. Forestry offsets can satisfy a certain portion of credits within that system. Any of the compliance mechanisms that we cover in that report do allow forestry credits to satisfy some portion of the carbon pricing mechanism, whether that's a carbon tax or an emissions trading scheme. That's why it's in that report. And we also talk about CORSIA, which is the scheme that was set up under international aviation for it's outside of the Paris Agreement, but related to Paris. So it's the aviation industries. The acronym stands for Carbon Offsetting Reduction Scheme and International Aviation, CORSIA. It was launched in the beginning of 2021. It's important here because they have defined certain standards that are define eligibility for compliance within this CORSIA system. Overall, like this is the first international compliance scheme that allows REDD+ credits into it. And that's particularly important. They're setting some big expectations here. And in particular, they have been influential in emphasizing the role of jurisdictional REDD, not project-based REDD, not REDD-based projects that are typically traded right now in voluntary carbon markets, but these larger projects that are at a broader geographic scale. And yeah, our trees is one of the credits under that system that's been approved for CORSIA eligibility, and VCS JNR. So as we get into a little bit more into the details here, I will mention that there's a lot of credits out there, but we're hearing more and more that there's becoming a shortage of credits. And jurisdictional REDD promises to be a huge new supply of credit. So that's particularly important that CORSIA is leading the way on this. The whole outline in this map, I'm not sure if you can tell, but it's highlighted in pink, and that is the global voluntary market. So yeah, just jumping ahead here. Big picture on what we tracked from this report in 2019, almost 105 million metric tons, which equated to $400 million in voluntary carbon markets, specifically for forestry. Again, everything here is just talking about forestry credits. The forest carbon credit transactions did stall in March and April of 2020 as COVID set in, but they quickly rebounded, as did the rest of the market during that phase. And that was also consistent with what we were seeing in compliance markets at the time. So it was an indication that the voluntary market is resilient. People were concerned that it was going to take another big dip as with the advent of COVID, but it came right back. It just stalled momentarily. I've mentioned a couple of times that these lines between voluntary and compliance markets are continuing to blur. And so, for example, Colombia has a carbon tax, and that is able to be satisfied in part by offsets. And those offsets can also come from VCS, one of the major independent standards, and the gold standard. So whereas VCS, which actually originally was named Voluntary Carbon Standard, is now the Verified Carbon Standard, they were looking ahead and seeing that these credits could satisfy not only voluntary compliance, but eventually compliance markets. And that's what we're seeing. South Africa is the same case. They are accepting credits that are verified through VCS and gold standard. The CORSIA is another example of that, where they are beginning to influence through their choices of what they are saying is important, what is CORSIA eligible, these jurisdictional REDD credits, which are not on the market yet, but are getting much closer as the standards that are being built around them. Art trees is one, VCS, JNR is another, as they both just recently come out with revisions to those standards, and those credits are getting closer to becoming available in the marketplace. And then the other thing that's been happening is this surging net zero corporate commitments that are driving market growth. And just in the past 18 months, over 1,500 companies have signed up for these net zero corporate commitments. And we're beginning to see that translate into the market growth that I'll get to in a moment. These are just some figures for what we saw coming out of the 2019 report. So this is focused on just forestry credits. So in 2017, we saw 16.9 million metric tons, and that's otherwise known as a megaton. 51.1 in 2018. That was the highest up to that point, and then 36.7 megatons of forestry credits traded in 2019. I guess I should note that what's important to keep in mind here is that Ecosystem Marketplace, again, it is tracking the transactions as the project developer sells to the first person in the chain, and whether that's an intermediary or an end buyer, and those intermediaries sell onwards, we try to track all of those transactions. So it's not just the issuance, it's not just the retirements, it's the actual transactions from between the various market actors. Again, forestry prices, you could see this graph, this bar graph is showing how they break out through various price points. So between $1 and $2, this is showing how many transactions there were, and it's showing how much volume there was. And you can see that most of these credits are selling between $1 and $8. Why this variance? Well, that's a key part of the voluntary carbon market transactions, in that every credit is different, and in that they are a number of additional attributes travel along with the credit. So buyers value within the voluntary market these additional attributes, such as, what is the country location that the project was developed in? What is the project category? What is the project type? What is the vintage, the year that it was created? What standard was it verified under? And most projects have this varying mix of attributes, and that goes a long way into defining what the price is. And you see that in this wide variety of prices here. Just real quickly, this is a look at what the buyer's portion of what we're seeing just from the forestry credits from the 2019 data set. The graph on the left, I apologize, I realize this is hard to read at this level. It's just showing the countries that are the top sources of credits, and the countries that are the top buyers of those credits, and how they're moving between those top source countries and buyer countries. And when I say buyer country, I don't mean the country itself is buying them. The buyers are based in these destination countries. And you can see that most of them are being sold into Europe, in this case, France, the UK, and the United States in 2019. The graph on the right is just showing the breakdown of business sectors that are the end buyers. And I'll note that the private sector companies comprise about 96% of the volume purchased in 2019, with consumer goods being that largest wedge of the pie in dark blue. Finance and insurance sector was the second largest with about 19%, and airlines purchasing the third largest chunk of the pie at 13%. This is a little bit of a different look. This is not our price data that comes from the market survey that we run. It is the issuances and retirements information that is coming from the registries and the standards. It runs through, it's annual until that last set of two bars, which is January 2021 through April 2021. The first bar in each series is the issuances. The second bar is the retirements. One thing that jumps out here is that most of the forestry credits, again, this is all forestry information up to this point, is 90% of it is being issued and retired are the VCS credits. So I won't dwell too much more on that. Come back to issuances, retirements in a bit. Yeah, these are some of the companies that are really committed to natural climate solutions or forestry and land use credit solutions. And I won't go into this much detail either, but Walmart, Microsoft, Amazon, JetBlue, Shell are all key players that have made commitments around forestry and land use credits within the last couple of years. Then shifting gears a little bit, and this is moving more towards the information that we are putting out more recently in the State of Voluntary Carbon Markets report. We just put out installment 1 in the middle of September. We are trying to up our game, and we are trying to meet the moment as these markets take off. And one of the things that we're doing is we have moved from, I used the word survey before, I guess we think less of it as a survey nowadays, and more as a on-demand data reporting platform. So we have a new online platform where we're still doing all the legwork and reaching out to our group of market actors that we built up over the past 15 years. And we are asking for more detailed information. So we're still asking for prices and volumes and all the additional attributes that I mentioned before, but more information on buyers, what they know about the buyers, because this information is coming primarily from the supply side. Who are the project developers and intermediaries, and what do they know about the buyers that they're selling to, and the corporate claims that those buyers are making, and how much of this is spot versus forward markets, and how much of it is OTC, these over-the-counter transactions, versus through brokers. So it's a much richer data set that we're developing now, and I think most importantly, it's more frequent, whereas this used to be this annual survey, and we'd look back at the last year. This online data platform is now allowing us to ask right up to the current moment, and some of the respondents will still report to us on an annual basis, but about 50% of them said that they will either be able to report to us quarterly or monthly or even weekly in some cases, and that will allow us to compile more information and to give more up-to-date information as these prices move, which is what everyone wants. So that's all I'll say about that. The other side of this is that we're trying to do a better job in sharing the information out with the wider market, and that's what our mandate is. So rather than waiting for a year for the next State of Voluntary Carbon Markets report, we're developing a data dashboard. We have a public data dashboard out now. We're relaunching it, I believe it's tomorrow, where we're going to have a little bit more functionality on that. And we're also working on a version that has a little bit more detailed and functionality for our respondents. So that is the carrot for the people that are supplying the data to plug into and continue supplying the data, that we will give them a little bit more, be able to dive a little bit deeper into some of the data that we've compiled, still while maintaining this anonymity that we're known for in terms of not sharing out specific project details. Just a quick slide here on some of these figures for this 2021 report. We were collecting data right up through August 31st. It's from project developers, investors, and intermediaries. It's from 172 market actors. That's a 13% increase from last year. And the projects are located for this last data set in over 80 countries. The respondents were based in over 40 countries. This is the cover of that report, Markets in Motion, that was put out on September 15th. It was launched with a webinar that had just an absolutely tremendous, we were blown away by the response. 2,500 people registered for this webinar, which is an order of magnitude larger than most of our webinars. This one covers the voluntary markets. It's not just forestry focused. So at this point, the numbers are going to be combining. It's not just focused on forestry. These numbers I'm showing you now, it's all of the forest categories that are exclusive to voluntary carbon markets. So I think we were very pleased with this response, but it's more of a reflection of where these markets are at, that they're taking off, and you can see it in these numbers here. In 2019, we tracked 104 million tons, and in 2020 it was 188 million tons, so an 80% increase. And then in 2021, 239 million tons, and that is just through August 31st. That is not extrapolated out for what it would be over the full year. That is just through August 31st. And what's even more amazing is that we know there's data missing there. There are people, this is the first time we're doing this, where we're collecting this data like up to the moment. And there are some organizations that were not prepared to do that yet. So we know that there's more data to be had out there in terms of the September through December numbers, and through the groups that still need to pull their figures together for this year. This is just sort of a longer historical look of where these volumes are in this market. So those last 3 years were on that last slide, the 104 million tons, 188, 239 for 1.7 billion tons overall. So we've been tracking these markets since I think the first report was in 2006, but we have data going back earlier in the early 2000s. And this is just a look at the values that those tons represent. So I think the the big news here is that this will be the first year that we're above $1 billion market. It's not there yet, 748 million, but again, it's just through August. And once we get all the final data in at the end of the year and it's all trued up, we expect it to be over $1 billion for sure. And that's so far it's $6.7 billion tracked over the life of these markets. This is flipping back to the issuances versus retirements view. And again, this information is pulled from the registries. Most of them are public. Some of them we've got information that are not sharing this information publicly, but they shared it with us. And we roll it into this data set. At the bottom of the screen, it lists all the various registries that are included here. Again, it's not just forestry. This is across all the credit types. And you can see that the issuances have really accelerated in the past few years. They've always outpaced the retirements. So there is a surplus of credits out there, but you can see that gap widening in the past few years. Interestingly, as we talk to market actors, we're also hearing them say that, for the quality credits, particularly forestry credits that are valued more highly, the project developers are selling out. They're selling out of stock. And they're basing contracts, and they're now developing forward contracts for forward deliveries. So I'm not sure how to square that circle. On the one hand, there is a lot of issuances out there that have not been retired yet. I think one interpretation is that the buyers of them are buying and holding and sitting on some of these credits without retiring them, maybe as an investment and speculators coming into the marketplace. Again, this is the breakdown of categories beyond just forestry and land use. So that top line is forestry and land use, and then the next line is renewable energy, and down below are some of the other credit categories that are not as dominant as those first two. So forestry and land use and renewable energies have been sort of swapping spaces over the past few years in terms of what is the most issued, what is the most traded credit type, and these numbers have jumped up significantly just in the past year, with 57 million tons issued of forestry and land use credits in 2020 in this box here, 38 million tons of retirements. And then again, just through August of 2021, 107 million tons of forestry credits issued and 44 million tons of retirements. So this is just phenomenal growth that we're seeing in this market at this point. This is a little bit more of a historical breakdown of the transactions, going back to the transactions, not the issuances and retirements. But again, for our purposes here today, the forestry and land use is what you're most interested in. This is picking up on an earlier graphic where I showed 2019, it was 36 million tons at $4.33 a ton. In 2020, we were at 48 million tons of forestry and land use credits. That's a 30% rise. And the price jumped up to $5.60, so a significant rise. And then a huge growth of volume transacted at 115 million tons, again, just through August of 2021, 140% increase with the price falling back just a little bit. This is drilling down a little bit more on the credit types. So forestry and land use is this broader category, and within that are credit types such as RED, afforestation, deforestation, afforestation, reforestation, and improved forest management. And this is just providing a little bit more detail. So the first bar graph in each of these is the year 2019. The second bar represents 2020. The third bar represents January through August of 2021. And you can see the volume of RED just exploding beyond 100 million in terms of transactions. These are the price points here. Price remaining relatively stable, but interestingly still growing. Typically, we see kind of a standard economic dynamic where larger transactions drive lower prices. But even with this tremendous growth in volume, we're still seeing a relatively stable and slightly growing price across RED. The afforestation, reforestation credit types, much lower volumes, but much higher prices. And these are all renewable energy credit prices. You can find more details in this most recent report. And then this is near final slide. This is breakdown of the credits, the prices from the standards. So the ACR, American Carbon Registry, volume in 2019, volume in 2020, volume in 2021 through August, and their corresponding prices. I won't go into too much detail here. I'll just leave this slide with you. I think the important thing to note is the verified carbon standard really dominates the space, whether it's all credit types combined, or even more in particular, the forestry and land use credits that they transact. They're particularly strong in red credits. So you can see that their volumes are just an order of magnitude more than these other major standards. So including 125 million tons transacted from VCS credits in just through August of 2021. You can see how the prices fluctuate between them. I typically don't put much weight on the prices between the standards, because what's hidden here is that different standards, for instance, VCS is doing a lot of red credits. So those prices are going to be lower than gold standard, which their forestry, they don't handle red credits, but they do afforestation and reforestation within gold standard. They also deal with smaller batches. Things like American Carbon Registry are based primarily in North America, so their prices are affected by the location as well, where people are willing to pay more. So in the reports, we pull apart a little bit more of the details of how these prices move, and the data dashboard that I mentioned earlier is going to give more functionality for users to be able to dig much deeper into how these prices move. This is information on how the buyer sectors, the prices that they're paying, the volumes that they're buying. I think for time, I'm just going to skip over this, but just to note that this is, again, information that is coming from the survey, the data that we collect, that is from the perspective of the project developers and the intermediaries, and them telling us who their buyers are. And you can see in 2021 so far, the #1 buyer sector by far has been energy, which does tend to focus a lot on the forestry and land use credit types. And then last slide, just looking ahead, I want to flag a few things, and we can just maybe leave this slide up, and maybe I won't go into too much detail here in case any of this spurs discussion points, but some key trends, the promise of jurisdictional red. I went into this in the beginning, right? So these different financing mechanisms that have been at work for 10 years now, going through this readiness implementation and results-based payments, that work is now, it feels like it's coming to fruition. And there are these standards out there like R-Trees and VCS JNR that are now in a position to begin certifying credits that would be ideally available with for purchase within markets. The volume that jurisdictional red could supply is critical if we're going to meet the need of this market. If all of these commitments come through in terms of the private sector and the amount of offsets that they might need, there's going to need to be a new source, and jurisdictional red could be that source. I'd say that increasing market scale will require higher offset prices. We are seeing, we're still, the figures here have shown that the prices are increasing, right? But they're not increasing in order of magnitude, and they're not increasing to the extent that might be needed to drive the supply that is needed. So, we're still in the $4 and $5 range on red, and even new initiatives like Emergent and the Leaf Coalition that are promising a $10 floor price on jurisdictional red. That's great. It's moving ahead, but it's not going to get to the order of magnitude that is probably needed to drive gigatons that are needed every year. Influence of investors. Investors have always been important in this space. There's a number of groups that have kind of amalgamated under the Glasgow Financial Alliance for Net Zero. And yeah, that's $70 trillion, trillion with a T, in assets that bring together new and existing net zero finance initiatives. And I think I mentioned before that we've been hearing that the buyers out there are not necessarily just companies anymore, but they're financial institutions that are seeing an opportunity in this. They're seeing that these prices can only go up, and they're coming into this market now and starting to buy up credits at what they consider, I imagine, a low price. Removals versus reduction is an ongoing discussion, always has been. I think it's been given impetus, momentum by the Oxford offsetting principles and SBTI, which is, oh, I'm sorry, just don't know how I did that. So let's get back into the slideshow here. Oh, I see. I've gone to that slide. All right. I think I'm timing out, so maybe I'll leave it there. We'll just leave this slide up at the end. And Lauren, maybe we open it up for questions now.
Yeah, that sounds great. And Patrick, I'll remind you to do that, your little display settings toggle there.
Okay, there we go.
Over to the left, actually, yeah, to switch it to the full screen mode for us. But no, this was incredibly helpful. Thanks so much for taking the time to give us this overview. I know we have some really interesting questions, but it's really helpful to have the full rundown here. One kind of clarifying question, I'm wondering if you can maybe go back to the issuances and retirement slide.
Yes, can I go back to the issuance and retirement slide? Let me get back into the slide sorter mode, I guess, as a starter.
You might even be able to just explain this. It's just a kind of a terminology question.
Okay.
If so, maybe we could just stick with that. And if you're having any troubles with that, I think most of the questions we have here are more so, yeah, like some kind of bigger kind of theory questions about this. But can you clarify for us in terms of the process from issuances to retirements? Can you just clarify how that information is tracked, and particularly on the retirements? So how and to whom are those reported? You mentioned that seems like they're not all being retired every year. So how do you have a sense of where's that information tracked?
So the standards put out their own registries that are publicly available, and that information comes in different forms. And what we're doing in Ecosystem Marketplace is compiling that information, putting it all into one meta registry, which is one of the tabs on our public dashboard, and then it's sortable from there. There are some registries that are not sharing that information publicly, and we have relations with them and are getting the annual updates from them, and sometimes more frequently, I think, and integrating that into this meta registry that we're providing.
Okay, so some of that information, so basically they're reporting back to the registries in that case. So if they're purchasing credits from a specific registry, then they're reported back as retired when they're actually used against an emission.
Well, what the registry is tracking are just the issuances and retirements. They're not tracking the transactions that have the price information and all those other details. The standards and registries are blind to that. So the Ecosystem Marketplace is the only group that's tracking that largely. So yeah, it's what they are able to put up onto the registries are just the issuances and retirements numbers and the project information. They know the details about the projects from the project documentation that they have.
Mm-hmm. So another question that we had about transparency generally. So we had a question, just about the challenges with transparency. You mentioned a couple of times the kind of opaque nature of this market. And this specific question mentioned, like possibility for data manipulation, particularly if it's, private sector targets, or it's not, government information. Like there's a lot of different actors involved. What are your kind of insights on that? Do you think that could change in the near future? Obviously you're contributing to some transparency, but what do you think are the general challenges and opportunities there?
It's interesting. This data is self-reported, and we do the due diligence necessary and do a lot of feedback and follow up with the individual respondents to the survey. At different times, I've heard people make an argument that people are, going to be motivated to give you a higher price than what they're actually selling for. And other times I've heard them say, no, they're going to give you a lower price depending on whether the buyer or the seller. I think that's something that we've dealt with all along. But the prices that we're getting, we do the due diligence and we check them out to the extent possible. And I feel that they are, our sense is that they're not overestimating or underestimating the prices. And we're frequently hearing back from people like, at the same time, those prices are too low, those prices are too high, depending on what their own individual experiences are. But it's never a consistent, we're never hearing on one side or the other. Like, these prices don't make any sense to us, just in one direction.
Yeah. Yeah, and I've heard the same. It seems like it's very context and site specific. A kind of question here, getting at this idea of like a risk of double counting or multiple counting. There's a lot of entities involved and multiple registries. There's private sector commitments, and then increasingly like jurisdictional level commitments, like US state level commitments. Of how do you see the voluntary space and market space going forward, with potential like overlapping commitments or taking credit? Do you have any? I mean, it's getting a little outside of exactly what you talked about today, but I could share an example of like working with a US state that wants to have a carbon neutrality agreement, but they have a fair amount of fair forest in carbon markets already. So they don't have a plan to like deduct that from their inventory or something like. So do you have a sense of how that could maybe start to be resolved going forward? I don't know if we've hit major challenges yet, but they're kind of like on the horizon.
So for example, you're talking about Article 6 within the Paris Agreement and then the call for corresponding adjustments.
Well, yeah, that's actually related too, but yes, but also, like it's states that are active in the US states that are active in the Climate Alliance and making commitments, but then within their state jurisdictions have offset projects that they may not even really know that much about because they're on registries and they're, so it can be a challenge for like the government actors then to know how much of the carbon in their jurisdictions are being accounted for outside.
Yeah. Well, all the information we collect, we don't ask just for voluntary credits, but we do ask people to specify, what is the driver for this? Is it for a voluntary purpose or is it for a compliance purpose? And if it's under a compliance mechanism, what is that mechanism? And basically that is one of the questions that has to be answered. One of the challenges, we ask a lot of questions. Not everyone answers every single question, and that's understandable. But that's one of the ones that has to be answered. We have to know if it's being bought for a voluntary purpose in order to decide whether it falls into this voluntary carbon market report, or if it's forestry, if it goes into the compliance section of the forestry report. So we do have eyes on that. As far as tracking all of it, we are tracking. It's not an issue of double counting in terms of one actor selling to another. If A sells to B and B sells to C, in this case, we want to see both of those transactions. It's not double. That is not double counting in this example, because they are two separate transactions. And these, the project developer can sell to an intermediary who sells on to another intermediary, and on it goes. That's all counted. That's not considered double counting in this survey. Where we do need to be careful in scrubbing double counting is if it's, for example, sold through an exchange platform where it's essentially A sells to C and B is the exchange platform that does not take ownership. They facilitate the transaction of A to C. And we get information from those exchange platforms in many cases, and we need to scrub the data. So we need to go through it very carefully and see what the exchange traded platform, the intermediary who is not taking possession of the offset, what they have reported, and then what the seller has reported as well. And if it shows up in both places, then we need to scrub it. But the sort of holy grail for us is this end-to-end transparency, is what we call it, right? So one of the new questions that we're asking is what's the project ID of the transaction? And if we can begin to track that all the way through, then we'll have a much clearer through line on how these credits move from beginning to end.
Yeah, that's really helpful. And we are right on our hour, but maybe I could just kind of ask another question, one final question here. There are emerging programs and different types of models that have, we had a couple questions here about ideas like permanence and different types of programs that are requiring different time commitments. For example, like the Family Forest Carbon Program is requiring different time commitments for activities. How do you see this going forward as we kind of continue to move away from, what at this point you would almost call like a traditional forest carbon project that we've been seeing, for over a decade, is now changing in the nature of the commitments made by landowners for different types of programs? Do you have any insights on if that would change how you're tracking this information, or does it still hit the market in the same way in the end?
I think for the way we track for those projects, that hits the market in the same way. Mm-hmm. What I'm more concerned about is the jurisdictional red credits and, how they start coming to market and, how we get eyes on them and the influence that it could have on the space. If it's true that, we're rapidly bumping up against the supply of what's out there and people are hunting for new credits, and then there's this surge in jurisdictional red. The challenge there is that there's, we describe it as a chicken and egg problem. One of the other programs within Forest Trends works on this in something called the Green Gigaton Challenge, which is aligned to the Emergent Forest Finance Accelerator, which is the group that is running the LEAF Coalition. So, there's a lot of jurisdictions out there with a lot of tons that they could produce at a jurisdictional level, but they're hesitant to take the next step forward and, putting the effort in and producing those tons unless there's a strong demand signal from the marketplace. And the demand, on the corporate side, they're wondering, like, are these credits going to be viewed as legitimate? So both sides are staring at each other a little bit. And what LEAF is trying to do and other initiatives like Green Gigaton Challenge is to kind of break that stalemate and send a strong demand signal. So LEAF has put $1 billion into buying these jurisdictional credits at $10 a ton floor price. And that could be a game changer. If jurisdictional red is going for $10 a ton, how is that going to affect all these other credits at the project level?
Yeah, those are good questions. A lot to keep an eye on. So Patrick, thank you so much for all of this insight. It was fascinating to see these numbers and all this growth and the changing landscape of carbon credits. And it is really great, though, to see the uptick in interest and connecting different private sector actors to this space. So thanks so much for the overview. Just a quick note that we will post the recording again, and I will also post a direct link to the report that Patrick has mentioned a couple of times today that came out just this last summer. So have easy access to getting that. And with that, we'll just wrap up. We have our next webinar in 1 month, and I dropped a link earlier to register for that. If you'd like to join, we'd love to have you, and let everyone enjoy the rest of their day. But thanks again, Patrick. Appreciate the time.
Thank you, Lauren. Thanks, Daphne.
Take care, everybody.